Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And it is time, as usual every month, for the landscape, the high yield income landscape overview and picks of the month. And this is going to be the Canadian episode, so we're going to cover all the high yield funds listed on the Canadian market. Don't forget that there will be a separate episode probably coming out very shortly after this one on the US listed funds. So if you're American, you only invest on the US stock market, you don't need to watch this one. You could watch the US one. So as usual, we'll start first with checking out how the markets have done in the last month. I am filming this on May the 1st, so it hasn't been that great of an April, to be honest, for both the Canadian and US stock markets. You see here the TSX 60, which represents, I would say, Canada overall, is down 2.5%. The S&P 500, which is, obviously overall US market, down 4%, and NASDAQ a little bit even more, down almost 5%. So it hasn't been a great month, probably because I think inflation is still here and there's still maybe there's going to be delays with the interest rate cut. So that's pretty much why I believe the market went down. So let's go over the landscape now. And of course, I'd like to thank the sponsor and great friend of the channel, Harvest ETFs. They are sponsoring this episode here. So my personal favorite and the one I own myself is HDIF, the Harvest Diversified Monthly Income ETF, which is almost 11% yield now, hovering over the $8 mark here, which is a pretty good pickup. This is their all-in-one diversified stocks or equity solution. And in case you missed it, they have come out with 3 brand new ETFs, all 3 income oriented. And I did a video on these. I think you really should be aware if you like a balanced all-in-one approach. Well, they did come out with HBIG and HBIE, which basically does, compared to HDIF, which is all stocks, this is 60% stocks, 40% fixed income, but pretty much almost all covered call focus. So it's also an all-in-one income solution like HDIF, but if you want a balanced approach, I would strongly recommend checking these out. Check out my video where we do a review of these ETFs, and I talked to Michael Kovacs about them. I especially like HBIE because it's a leverage version. You guys know that I would always prefer the leverage version. So check out that video. A little over 10% yield now, by the way, on HBIE. They also came out with the sector-specific industrial covered call ETF as well. So if you want to get into the industrial stocks, you could check that one out as well. So HDIF, always a good pickup. And of course, guys, in this channel, I typically, in terms of landscape of what I always check and review are the diversified funds. So let's go through them. HDIF is first. HYLD and HDIV are from Hamilton ETFs. These are also great options as well. And big news for Hamilton, they've raised the distribution quite significantly for HYLD from 13.1 cents a month to 13.8. So we're actually past the original distribution of 13.75 cents a month. Of course, we know why, right? It's because they internalized the fund. The fund did go through some fantastic changes. I think HYLD is better than ever. HDIV, even bigger distribution increase, I believe, from 15.1 cents a month to 16.5. So this one also is fully internalized. It does have some growth in here. It's not a pure income ETF, but it's they're both doing really well and they're both great diversified all-in-one options. HDIV being the OG of the leveraged covered call ETF, one of the first or the first in Canada. Big news coming from now Global X. So Horizons has completed their rebranding as of today, May 1st. So all the stock symbols are the same as you could see here, USCL. I'm going through the 4 income-oriented diversified one. So it would be USCL, which is pretty much the S&P 500 with covered calls and 25% leverage. QQCL, the NASDAQ, CNCL, the TSX 60, the overall Canadian market. And of course, now you have EQCL, which is kind of an all-in-one, not full income, has a little bit of growth in there, but mostly covered call. It includes, as you know, USCC, QQCC, and CNCC, but it also has 2 growth ETFs that focuses on emerging markets and developed outside of North America. So big rebranding. Hopefully I'm looking to partner up with Global X now to maybe interview them and see what this rebranding is all about. Talk to them about that, et cetera, et cetera. So I'm in communication with them. They are a big firm, so it takes more time to set something up with them. But as far as I could tell, as far as I know and that I've read, it should have no changes on the existing ETFs. Just the names have changed. Basically, they just put Global X in front instead of Horizons. That's about it. So USCL, no changes. QQCL, no changes. CNCL, no changes. And when I mean no changes, I mean no changes in the monthly distribution. They're all very, very high yield. I believe USCL, QQCL, well over 13% or near the 13% mark, because obviously the S&P 500 and the NASDAQ 100 have gone down. Piece of news for EQCL, they did raise the distribution from 19.5 cents to 21 cents. So is this going to be permanent? Well, typically, if we look at the past distributions, Global X now, I got to stop saying Horizons, likes to keep it consistent. So I'm assuming this is going to be the new distribution going forward. Of course, it could change, but I strongly doubt it, which is great news if you hold EQCL, a fantastic all-in-one here. So the yield with the distribution increase here is a little over 11%, I believe, right? If you do 21 cents times 12 divided by the current price of 21.21, almost 12% yield. So really good for a all-in-one solution that is leveraged 25%, but also has some growth as well. So really, really cool. Moving on to BMAX. BMAX also recently increased their distribution. A couple of months ago. Yeah, actually, it's not really recent. It's been a while ago, a couple of months ago. So this one is doing really well as well. It's under 10% yield. It doesn't have as much yield as the other one. It does have a little bit more leverage, 33%, but this is what I would consider a really more stable one, because it's 70% stocks, 30% fixed income. So yeah, I guess you could compare it. You could compare the BMAX a little bit to the new HBIE now, right? Because it's not a full equity solution. So yeah, that's it for that, for the ETFs. Well, let's go with EIT. I decided to put EIT in the mix here, or cover it part of the leveraged covered call ETFs. Although this is leverage, but it's not an ETF, it's a closed-end fund. EIT is still the king. It's still trading at a discount, right? Great time to pick it up if you like EIT. Really nice mix of both Canada and US as well. You see that here. Sorry, asset mix. It's about 50-50, but it does have more, in terms of the breakdown, it has a lot of financials. It has a lot of energy. It does look more like a Canadian type of sector breakdown. But of course, EIT is the king. It's doing really, really well. No changes, still 10 cents a month. But at this price, it's under 10% yield as well. Moving on to the non-leveraged all-in-ones here, you have ZWQT from BMO, which combines many of their covered call ETFs together. So in case you don't like leverage and you're more of a conservative investor, but you like income, you'll get about 6-7% yield with this one. Of course, you have Evolve's very popular ESPX and ETSX, which is literally covered calls on the S&P 500 for ESPX, up to 33%. So not super aggressive, less aggressive than, for example, USCL and QQCL, which go up to 50%. They could go up to 50%. By the way, you could see that here. In case you didn't know, you could actually see only Global X has this information every month. They update it, which I love. How much of the portfolio is covered, and what is the moneyness of the options here, percent out of the money. So USCL is basically it's right at 50%, right under 50%, and almost at the money. And you could go ahead and check for all of them. QQCL, a little bit less coverage, a little bit more out of the money, but that makes sense because the NASDAQ is more volatile than the S&P 500, so they probably they don't have to write as much. But if you don't like that level of covered call, you want a bit less covered calls, a little bit more growth potential, and you don't like the leverage, well, ESPX is a fantastic S&P 500 one to consider, and the ETSX is a fantastic TSX 60 to consider, and no changes on their distributions. By the way, let me just make sure. Yeah, it's still the same. No changes whatsoever here. So very, very consistent for both of these. Now, moving on to closed-end funds and split share funds. Fortunately, filming this on May 1st, so Quadravest doesn't have the updated dates here and NAV information. Of course, when this video comes out over the weekend, I'm hoping they will be out. So make sure to check those. I just wanted to point that out, that DFN did pay by the skin of its teeth at $15.01. So I guess compared to Brompton, Brompton has to be $15.10 for it to pay, or $15 plus the distribution. But I guess Quadrivest is different. As long as it's over 15, they'll pay it out. So they did declare the April distribution. So moving on back to the Brompton ones, there's still a lot of juicy stuff here to consider when it comes to split share funds. I especially like GDV. Look how close the NAV is compared to the stock price. It's absolutely incredible. And you even have some that are trading at discounts. The Lifeco one, the life insurance one, is still trading at a discount, right? It's worth more. You can see here, it's worth 638. I hope I'm not blocking it. And it's trading at 614. But PWI is especially trading at a big discount. You could pick it up for about 750 and it's worth 794. And I am arranging to have a call with Brompton's portfolio manager to discuss PWI because it's done really, really well in the last year, and it's still trading at a discount. So could be a great pickup. But even LBS, SBC, they are trading at premiums, but not by much. You see here 708, the NAV 758 is what you could pick it up for. SBC, pick it up at $9. It's worth $8.43. So it's shrinking. The premium discount for those ones as well. When it comes to Middlefield, they have ENS, which is also very close here. Enbridge hasn't been doing the well because it's a utilities and it gets put under pressure when rates go up. But the tide might be turning. I think Canada will probably be first to cut interest rates just because the economy is so crappy. They'll have no choice. So yeah, I mean, it's worth 1102 and you could pick some up for 1141. Still at a premium. The RS is at about 18-20% premium. I've been picking a lot up just because real estate is very, very undervalued. I think it's probably the most undervalued sector in the market right now, REITs, because they get put under pressure when interest rates go up. So this one is a good pickup, in my opinion, regardless of that it is trading at a premium. It's not the biggest premium in the world, but it is about 20%. So just make sure you understand and you are aware of that. So I believe that's pretty much it for the entire landscape of the more diversified funds and the split share funds. So what is undervalued? What are my picks for this month? Well, I still think financials are a great pickup, especially Canadian financials. It seems like the U.S. financials, if you just, for example, look at ZBK versus ZEB from BMO, right? The equal weight Canadian banks, equal weight U.S. banks. ZBK is completely destroying. So U.S. banks are outperforming Canadian banks. I think Canadian banks are still undervalued. So there's a million options to choose from. You have BKCL, you have Bank. Those are probably my two favorite options, but there's so many of them. There's HMAX, there's the one from Malva there's just all kinds. But we're talking about really nice, juicy, high 16, almost 17% yields for these ones. So a great time still to pick up Canadian financials, in my opinion. Utilities as well. I mean, utilities are still under pressure because of interest rate hikes. You have HUTE, which I like because it's leveraged and it's global utilities. It has electricity, telecom, and pipelines as well. There's also UMAX, which is really, really, really high yield now. I think it's like 16-17% yield now, pretty crazy. But this one has no leverage and the distributions have slightly been dropping. It's only normal, but remember that UMAX does a lot more covered calls than HUTE, right? It does at the money covered calls. Where is it? Right here. On about 50% of the portfolio. And it's only Canadian. It's only Canadian utility companies, whereas HUTE, less covered calls, so of course less yield, but more growth potential, and it's global. So those, and there's more. There's ZWU and there's other utilities ones as well. So, but by far, I think the thing that's really suffering the most and the best pickup is gotta be real estate. So there is RS if you want a leveraged option, but if you think the premium is too big, you don't want to pick up RS. There is always MREL, which is my personal favorite non-covered call ETF. There's ZRE, XRE, and those ones as well, VRE, but MREL I think is better. And MREL right now, by the way, no leverage, no covered calls, has a yield of about 8%, which is absolutely incredible. And you don't have to worry about, what is the net asset value compared to the price, because with ETFs, they're typically always the same. But RS, I think, is still a great pickup. I've been picking up a lot in April, and it's well over 13% yield. So if you enjoyed this video, guys, don't forget that as a Inner Circle member, by the way, in case you didn't know, You can click on join next to the subscribe button, or where the subscribe button normally is if you're not a member, to see this. But the first level, which is only a couple of bucks a month, gives you access to the weekly newsletter and opportunity report every single week, which looks like this. This is kind of a newsletter that I do where I my opinion, I say what sectors are undervalued, what are the upcoming videos that I'm working on, any news in the Canadian market. And I also look at all the premium and discounts. I let people know what split share funds are trading at a 10% premium or less, so it saves you time in doing so yourself. And which funds related to the undervalued sectors you could pick up. And I also cover the U.S. market as well. So if you really like this monthly video, I think you'll like this weekly newsletter and opportunity report, which is only one of the perks by becoming a member. So I would strongly consider it if you like this video. So that's it for the Canadian landscape. Don't forget to check out the other episode for the U.S. landscape. There's been an explosion of U.S. funds, so there's a lot to cover there. And if you're Canadian, don't forget that the best place to put those is in your RSP and liras, because there's no 15% withholding tax. So thanks everyone, and we're gonna do this again next month. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades, and PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.